and I think of it kind of this way, that from a broker to broker standpoint, because I'm a broker and you're a broker, that, and I was actually talking to an insurance broker today who is not captured, and I point blank said, if you are an insurance broker and you are captured, you're only going to be, if, like using your bean analogy, I only sell fresh beans, and only that, and that's what you're going to get. But as a broker, on the commercial side, for example, on the commercial real estate side, I can show you all the different things, and we can talk about all the different segments, and we can analyze your elements of risk. How involved do you want to be? How much money do you have, and whether or not you want to be able to add value to it, or etc. And we can help advise you, be true advisors, and put you in the right product, instead of us saying, well, I only do tenant rep. I can only help you find a building if you're going to be a tenant of the building, right? So there's a very big difference between a broker who's captured and somebody who is a broker who has a bunch of different things, because we can then really take you and give you advisement based on what you're seeing we're seeing in the market. So we're the ones that are getting all that knowledge, and you don't have to go to the lengths of knowing every single product, because we do.
It's interesting. I call a broker somebody who has got the experience or the wisdom. There's nothing that I do for people that they can't learn on their own.
Right.
It just might take them 10 or 12 years to learn it.
Right.
And they may not have 10 or 12 years to go learn it and then be able to deploy it. So all the properties that are listed, a business owner could go research them and find them and do all the data research, or they can just allow somebody else to use their wisdom and their insights. And so that's when you're connecting to people to what they want, whether it's insurance, real estate, or a loan, it is often the best thing to do is go find somebody who can have, again, all the options.
Sure.
Yeah.
Well, and add to that, we, an analogy which I think also applies to you, we represent other realtors. So ironically, even realtors who have the same tools as we do, they might be in the residential side. So we've become known as the realtor's realtor, because they're doing what they're doing. They're making the money. They want to have someone in their corner to help them invest. And we've even seen in the last little bit where commercial real estate appraisers who have all the tools and all the knowledge that, well, not all the knowledge, but a lot of the knowledge that we have, again, they're choosing to have us represent them because they want to spend time doing what they are really good at. And they don't want to be taking the time to having to go and find all of that stuff. And they want guidance. They want someone to walk alongside them through that process. And I think you do a lot of that too.
Yeah. I think in your situation, I think what those appraisers really want is they want to ride the coattails of your E&O insurance.
Yeah, that's true. Yes. So and we do have a lot of data that they don't have.
Exactly. So there's always something to be said when you are outside of the aisle of options of where you think you should be.
Opportunity cost.
Exactly. So if you're only looking at a bank, if you're only looking at a particular type of real estate, you are blind to what you don't know, and that's a real big weakness. And hopefully, that's what I provide people is so they have less of those blind spots.
So let's talk about the process to make it be easier.
Okay.
So one of the things that we do is we help smooth the path. We can't make it be a completely stress-free opportunity, but we do try to make it be as stress-free as possible. So talk about your access to capital and how do you smooth the path?
Yeah. So many years ago, when I kind of got drawn into becoming a business lending broker, I realized that the system it's built the way it is. You can call it unfair, or you can just call it the way it is. And I recognized that there was so much money that needed to be deployed that people didn't even know about. And I would start talking to a lender or a capital provider, and we'll just start there. All loans are capital, but not all capital is a loan. So there's ways you can actually get money, and it's not actually in a typical repayment vehicle as a loan. So when we're looking at all of these different categories, and I would send in huge files to a capital provider, and they said, dude, I don't even know what you're talking about. People send me a huge file, and there's 25 documents, and there's a 50-page business plan, and you're like, I don't even know how much money they want. And so I started boiling it down and boiling it down and boiling it down. I went to close to 200 websites of all of these capital collecting or agency deploying type of things. What are the key questions that everybody needs to know to actually understand where their capital is deployed? So this is the nugget.
Pre-interview,
It's 5 questions that you should be able to talk about yourself, like not even sentences, in order to understand where your capital is going to come from.
AKA insider info. You're going to want to note this, right?
So the first one is, hey, can you do a loan for a person in this particular geography? Just talk to your bank. Obviously, if you're talking to a local bank, they're going to be able to provide a local loan. But I get people from North Dakota and they say, hey, can you do a loan for $15 million? What state? North Dakota? No. So it's geography. There's a lot of lenders who don't lend in a particular state. They don't lend in a particular region of the country. They only lend in a particular patch of states. They only lend in 3 counties. So if you start off with, when you're seeking capital, I'm looking for a loan in this particular city, yes or no? No, call the next one. This county, yes. And you go forward. The next question is $50,000 loan versus a $50 million loan. It looks like a diamond. Like that. There's a lot of lenders in the middle, 500,000 to 2 million. There's not a lot of lenders who want to do a $50,000 loan. There's not a lot of lenders who are able to do a $50 million loan. So I've got this loan geography, this loan size. This is the industry. Is it a car wash? Is it a daycare? Is it a restaurant? Is it a hotel? Like, what is it we're actually trying to accomplish here that could be a reason why a bank would say, or a capital provider would say yes or no? So geography, industry, loan size. Lastly, why can't you get a loan from your own bank? I've only been in business for a year and a half. They want 3 years. My credit score is 600. They want 650. They want 70% LTV, but I'm 80%. There's a reason why you're stuck. There's a reason why you're still not with a loan approval. Those 4 or 5 questions, you can get to the capital provider that you need really quickly. How are you going to get this capital? It's going to be an AR, it's going to be a PO, it's going to be a real estate refinance, it's going to be a business acquisition, it's going to be a partner buy. Like, whatever it is that you're actually trying to accomplish will also tell you where you're needing to go. If you've got terrible credit, but you just got a huge $1 million contract from the government, you're not going to go to a bank with that. You're going to go to a AR facility or a PO facility. So knowing what you are gets you in the door. Then you bring in your 30-page business plan. Then you bring in your credit score. Then you bring in your 3 years financials. Then you bring in your 2 years projections. And then you bring in your blood type and all those things you need to bring.
Let me add one more thing to that.
Yeah, of course.
What about, because different banks have different appetites at different times.
Yeah.
In other words, it's a common misconception to think that banks lend all the time on the same thing, and that's actually not true. Their bucket might be full for multifamily, and it may be that they have it, but they're going to need to have a loan fall off in order for them to have the capital to lend again. So the 5th question might be, are you lending on multifamily at the time?
So that's industry. So there's 2 types of industry questions that a bank will use or a capital provider will use to exit you out. Do they never ever? Like, we never ever loan to bad hotels.
Right.
But we do loan to good hotels. So is it a never ever gas station, never ever C-store, never ever restaurant, or is it we're full up with hospitality right now?
Exactly.
And so those things change. And so can you loan to a hotel right now? If somebody's got $50 million in the bank with us, we'll loan to a $2 million hotel. Okay, that you're telling me that you don't loan to hotels at that point. But if they want it that bad, you will. So those things change. Without the appropriate guide or Sherpa or educator along the way, you'll be talking to 50 of the wrong banks, because you're going to be giving them all the documentation, all the information, and they just don't care. We're not going to do fast food restaurants right now. They can't. So very, very good point.
Well, and I also see that people give up early. They think that I've called 3 and they're not going to loan to me. And you think, I am never going to get a loan. And you're like, not with what you just said. You just are not talking to the right people. And that's probably when you need to say, well, maybe I need to have a broker who's going to get me to the right person, because clearly I'm doing this on my own and I am not finding the capital I need.
I've got a big slide that I put together, which is it's got all of the various categories of capital, from accounts receivable to investor, angel investor, to insurance provider, and on there's merchant card advance or short-term lenders like a Cabbage or a Payday or something like that. Lawyer Grenier sold this so well. If they go to the wrong capital provider 2 times, wrong bank, they go to 3 banks, your bank, my bank, a big bank, a small bank, and an online bank, and they get no from banks, and they go directly to the merchant card advance, and they get a really, really high rate, really, really short-term loan that stifles their growth, it crushes their P&L. There's other angles that they could have gone. Maybe it's a private money real estate loan because their mother has a free paid off free and clear house. Could be an equipment loan. Who knows? But they jump so easily to the easy online get funded in 2 days type of loan that they kill their growth. And if I could keep everybody off of merchant card advances, that would be a step in the right direction, because they take people out of business.
So
yeah,
we have been going with our hat in hand and our little briefcase to the banks, and we're asking, please, Mr. Banker, Mrs. Banker, I need money. But we should be interviewing them too. So it's not just about them. Obviously, we want to find them, but what are the red flags that we should be watching for as the borrower?
Yeah,
that's kind of an important thing.
So I say that if a capital provider is telling you words that end in T, be very, very cautious.
Example.
Easiest. Fastest. Lowest. Best. Nobody is any of those things. They're lying to you. They may not even know that they're lying to you, but if they're saying we're the best, easiest, fastest, lowest, be treading lightly. Nobody got a loan that they didn't deserve. Everybody gets the exact rate, generally speaking, the exact rate, the exact term that they deserve. Like a tiny teacup does not get the same value as a giant Ming vase. So somebody who doesn't have the prerequisites to get a $5 million loan, they're not going to get it. So if somebody's promising you those things, be very, very cautious. When you're interviewing a bank, some banks are going to want all of your banking relationship. Maybe you just want a transactional loan. You don't want to, change over your entire banking relationship, because I feel that, generally speaking, nobody cares where they get their commercial real estate loan from, but they absolutely care where they have a banking relationship with. Just because their bank is full on office buildings doesn't mean they want to change over their entire $5 million banking relationship and treasury and all the other loans to somebody just to get a next loan. So be very, very cautious when people make you have the entire relationship go over.
That's an important one.
It is, and you don't think about it.
I have no desire to have to go through that.
Yeah. So here's another one that I think that people need to be cautious about is when I hear somebody in the first sentence or 2 sentences say, "What is your rate?" I know that I'm not dealing with a very sophisticated borrower, because would you like a $100,000 loan at 0%? Yes or no?
Sure.
Okay, it's got a 4-month term. Can you handle the payment?
So $25,000 a month for the next 4 months? Maybe.
Maybe it's not so good.
Depends.
Exactly. So the
pocket change.
Yeah, exactly. So the formula is interest rate times amount divided by term, and how does it impact the P&L? And then we take a look at an example of, and I have some math on this, a $100,000 loan at 30% interest, which is what you'll get from Cabbage, and it's a 1-year term, and you've got about a $9,000 or $10,000 payment. Is that good or bad?
Depends.
Oh, see, that's a good answer. And so now let's say you have an SBA loan, $100,000 loan at 10% for a 10-year term. Is that a good loan or a bad loan?
Depends.
And then you've got a $100,000 loan that you're able to get off as a private money loan because you have a house that's free and clear. It's a 30-year amortization at 10%. Is that a good loan or a bad loan?
Depends.
Exactly. So what's the payback in interest on the 1 year at 30%?
Well, I want to see, for me, is it just in the examples that you've given, which ones of those are non-recourse? Which ones of those are going to have the lowest monthly payment?
Yep.
If that's my goal, if I need the lowest monthly versus what is because An SBA might give me the lowest monthly, but they're gonna have a higher
Your
Um,
total cost. So, and
total
this
cost.
is some of the secret sauce is know what's important to you. Is the lowest payment most important to you? Is the most assurance that you're going to get the loan funded most important to you? Is it the best interest rate because you want to brag about how low your interest rate is? Because there are those people. I've met them. They have like interest rate comparing parties. So we have no, it's true. They absolutely tell the story about how great a deal they got from their bank. So
Brag fest.
exactly. So, or how much impact or low impact do they want to have on the P&L? So, a 30-year amortized loan at 10%, you're looking at a $240,000 total payback. A 1-year amortized at 30% interest rate is a $36,000 total payback. So, when people say that they want the lowest rate, just understand that they aren't doing the full math equation. And so, show them the options of business owners should see your option of this, and this. And the business P&L or the occupancy and rent of a building will tell you which option is going to be the best for you. It's not rate determinant. Interest rates high, but it's just like the price of diesel, just like the price of tomatoes. It kind of fluctuates. Just if your business can't navigate a 10% loan and it needs a 6% loan, then it probably shouldn't get any loan at all because it's too thin a margin. So that's a little food
Sure.
for thought.
Sure. Well, and